In a world where change is the only constant, Mo Shamil stands at the forefront, guiding title professionals to not just grow their businesses, but to master the art of innovation. With every episode, you're handed the keys to unlock unparalleled growth and stay ahead of the curve. Get ready for a transformative journey.
If you're involved in real estate right now, especially on the title and settlement side, you know the feeling. Staying on top of federal rules can feel less like a process and more like trying to read fine print while riding a jet ski.
It really does. And the anxiety that comes with those constantly shifting regulations it's real.
Absolutely. And today, we are offering a shortcut through all that noise. We're doing a deep dive into what is probably the most critical compliance shift happening in real estate.
We're talking about the move away from those temporary, location-specific reporting rules to a permanent nationwide mandate. It is a monumental change.
Right. And our mission today is pretty simple. We've unpacked the latest government announcements, the industry guides, everything we could find to give you absolute clarity. If you run a title company or an agency, this is, well, it's vital.
The core of this whole thing is transparency. FinCEN, the Financial Crimes Enforcement Network, their goal is to stop money laundering through anonymous shell companies buying up real estate.
So we've all been dealing with the GTOs for years, the Geographic Targeting Orders. But this is something else entirely.
Something far more robust and permanent. And, we promise that by the end of this, you'll understand the new timeline, which has a surprising delay. And we'll give you a practical 5-step guide to get ready.
A blueprint to reduce that compliance anxiety. Okay, let's jump in. Let's set the stage by looking at this transition from the GTOs to this new nationwide rule. First off, what's the scope? What kind of deals are we talking about?
Okay, so the scope is specific, which is good for planning. The new rule applies specifically to all-cash residential real estate transactions.
All-cash residential. Got it.
Yeah.
And you mentioned the GTOs were temporary and location-specific. Why is that shift to nationwide so significant?
Well, it's a huge operational and, frankly, a psychological shift. The GTOs were these temporary orders that FinCEN had to renew every few months, and they only targeted certain high-risk cities.
Right. You're thinking Miami, Manhattan, LA, parts of Texas.
Exactly. They were looking at deals over, say, $300,000, but only in those specific places.
So if you were a title company in, Boise, Idaho, you might have felt like this didn't really apply to you.
Precisely. And that's the big change. This new mandate is nationwide. It means that suburban and rural transactions, deals that were never on the radar before, they're now under the exact same scrutiny.
So FinCEN is basically saying this isn't just a big city problem anymore.
It's a systemic national vulnerability, and they're creating a blanket policy to match.
And the sources are very clear about who has to do the reporting. This isn't a shared burden, is it?
No, not at all. The language is unequivocal. Title companies are designated as the primary reporting entities.
So the entire compliance burden, the liability, it all lands squarely on the agencies listening to us right now.
You are now the government's first line of defense, essentially. You're the ones collecting the data.
Okay, that brings us to the timeline.
Yeah.
Because the burden is clear, but the details are everything. And the news on the timeline is actually pretty good.
It is. It's been a long process. The first notice, the ANPRM, came out way back in December 2021. That was the first signal flare.
Then a couple of years later, October 2023, we got the NPRM, the actual proposed rule.
Right. That's when we saw the actual draft language. The public comment period on that finally closed in July of 2025.
So everyone was expecting a final rule pretty soon after that. But this is where it gets really interesting for your planning. In October 2025, FinCEN announced a delay.
A very unexpected, but I think very welcome delay. And the reason for it is what's so fascinating. This wasn't just some bureaucratic lag.
Not at all. They explicitly delayed the effective date to mid or late 2026, and they said it was because of overwhelming feedback from the industry.
Specifically from independent title companies, the little guys.
Yeah, they raised some really legitimate concerns. They talked about the huge unbudgeted costs.
And the need for more clarity on some of the definitions, which we'll get into.
And crucially, they said they just didn't have the operational capacity. They told FinCEN, look, we need more time to build the systems for this. And FinCEN listened.
They did. So the new timeline, what you should be planning for, is a final rule published in Q1 of 2026.
And then it actually becomes effective with a grace period probably sometime in Q3 or Q4 of 2026.
Which gives everyone almost a full extra year to prepare. That extension is critical.
It's a golden ticket, really. Time to be methodical instead of scrambling. So how do we use that time? Let's dive into that 5-step blueprint. Let's start with steps 1 and 2.
Okay, step 1 is foundational. Just understand the rule. We've covered the basics, all cash residential, it replaces the GTOs, but everyone on your team needs to get this, from the front desk to the closing agent.
Because if they don't know why they're asking for all this sensitive info, they can't handle it when a client pushes back.
Exactly. Which brings us to step 2, and this is where the heavy lifting starts. Know what must be reported.
Okay, so beyond the transaction details, what specific information about the people involved is required?
The rule is really aimed at transactions involving legal entities, LLCs, corporations, some trusts.
The vehicles used to hide the real owners.
Precisely. And so the mandate requires title companies to collect and report what's called beneficial ownership information, or BOI.
Now, beneficial owner used to be a simpler term, but the new FinCEN definition is, it's a lot broader, isn't it?
It is. The first part is simple enough. Anyone who owns 25% or more of the company buying the property. But here's the part that keeps title attorneys up at night.
Let me guess.
You also have to report anyone with substantial control, even if they have 0% ownership.
Okay, that sounds like a nightmare. How is a title agent supposed to become a detective and figure out who has substantial control if that person's name isn't on any of the paperwork?
That is the fundamental challenge. Substantial control could be a senior officer, an executive. It could even be someone who just has veto power over big decisions. You have to look for the person pulling the strings.
You can't just ask the person at the closing table. You need more.
You absolutely need more. Your policy has to require some kind of certification or affidavit from the buyer, from the LLC, stating that they've disclosed everyone who meets that definition.
So you shift the burden of identifying them back to the entity itself.
Right. But you, the title agency, still have the burden of collecting their data and reporting it.
Okay, a huge operational change right there.
Okay.
Let's move to step 3. Once you've identified that beneficial owner, what data do you need?
Step 3 is collect required information. You need 4 specific things from every single beneficial owner.
What are they?
Their full legal name, their date of birth, their current residential address, not the property address, and a clear copy of a government-issued photo ID, like a passport or a driver's license.
Wait a second. So the closing agent is now responsible for asking a buyer for their driver's license, their birth date, their personal home address. That's going to be a fun conversation.
It's a massive friction point, but the good news is you don't have to invent a new form. You can use standard ALTA forms or the ID verification forms your underwriter already provides.
Okay, so assuming you get that data, step 4 is report to FinCEN. How does that actually happen?
The filing is all digital. It's done through FinCEN's BSAE filing system.
And I'm guessing a lot of title agencies aren't familiar with that system.
Probably not, which is why training is so important. The filing itself is likely due within 30 days of closing.
30 days. That's a tight window.
It is. It creates a whole new post-closing checklist. And you have to save proof of your filing, a confirmation number.
Which leads right into step 5, store and secure documentation. This is about protecting all that sensitive data you just collected.
Exactly. There's a mandatory retention period for all these records, a full 5 years.
5 years? Wow. Why so long?
It aligns with the statute of limitations for a lot of financial crimes. If FinCEN opens an investigation 3 years from now, you have to be able to produce that entire audit trail.
And that 5-year mandate is where the real cost comes in, isn't it? This isn't just a filing cabinet. You're storing copies of people's passports.
Absolutely. The cost of setting up a secure, searchable, encrypted digital storage system is substantial. This goes right back to the concerns that caused the delay in the first place. You need a documented, repeatable office policy for this.
Okay, 5 steps. Sounds manageable on paper, but let's talk about the real world, the common concerns.
The biggest one, for sure, is client pushback on the ID verification. People are naturally resistant to sharing that kind of data.
So what's the advice for an agent when a client says, "Why do you need my driver's license? My name's not even on the deed."
You have to prepare for that. Develop scripts. Have an FAQ ready. The agent needs to be able to calmly explain that it's a new federal law and it's required for the closing to proceed.
And you have to address the privacy fear.
Right? Yeah.
Is this information going to be public record?
That's a vital point to make. The answer is a hard no. It goes only to FinCEN for law enforcement. It is not recorded publicly at the county level. Stressing that helps build trust.
And what about the internal side? Workflow confusion. How do you prevent errors in a busy office?
The best practice we're seeing is to designate an internal FinCEN champion, one person who owns the process. They handle the training, they troubleshoot, they're the final check on the reports. It creates accountability.
What's really encouraging here is how the industry is already getting ready. The underwriters are developing tools right now.
They are. You should be calling your underwriter. Companies like FNF and Chicago Title are already putting out checklists and webinars. First American has a tool to help you identify beneficial owners.
And others like Old Republic and Stewart have compliance advisory teams you can call.
Right. And the big software platforms, Qualia, Reesware, they're all working on building these workflows directly into their systems. The hope is that a lot of this becomes automated over time.
So let's bring this all home.
Yeah.
The big takeaway is that this is happening. The GTOs are being replaced by a permanent nationwide requirement.
Correct. And the good news, the silver lining, is that this delay gives you a really valuable window to prepare until late 2026.
And the two big things to focus on right now are, one, figuring out how you're going to identify people with that substantial control.
And two, establishing that secure 5-year digital storage policy. Those are the immediate action items.
If you connect this to the bigger picture, it feels like a profound shift in how the government views private ownership.
It is. And it makes you wonder, now that FinCEN has set this precedent for residential real estate, what does it suggest for the future? How long before we see similar transparency requirements for, say, commercial real estate or other large private transactions?
That's a thought every agency owner should be thinking about as they build their policies for today. Transparency is the note of the game. Excellent analysis.
Thanks for diving deep with us. Now go use that extra time to get prepared.
In a world where change is the only constant, Mohs Shamil stands at the forefront, guiding title professionals to not just grow their businesses, but to master the art of innovation. With every episode, you're handed the keys to unlock unparalleled growth and stay ahead of the curve. Get ready for a transformative journey